Hi students. So this lecture for BBA second sem on corporate accounting, and we started the unit number 2, which is the valuation of goodwill and the valuation of the shares, and we saw the 2 or 3 lectures on this topic, and I hope all of you understand that the theoretical part of this valuation of goodwill. Okay, so in the earlier session, we saw what in by goodwill it is and the reputation for the company. It's depend on the profit. Okay, it's extra profit making. Okay, so if the profit is increased, then the goodwill also is increased. Like this, we saw so many things related to the valuation of the goodwill. Okay, so we saw the characteristics of goodwill. So needs for valuation of goodwill, it means which are those needs are there. Sole trading, for the sole trading purpose, Waheder needs the goodwill. For the partnership firm purpose, for the joint stock company purpose, why it's the goodwill is a valuation of goodwill is needed. Okay, so like this we saw, as well as which are those factors are affecting for the goodwill, and it will come for the 5 marks with explanations. Okay, you have to explain all these things. Okay, so like location of a business premises. Okay, where the business should be the setup, and it means for the increasing of the profit. Okay, so nature of the business, small scale business, okay, large scale business. Okay, so it's depend on the nature of the business also. Monopolized business, risk factor. Okay, so high risk high profit, it means what the risk is there in every business. Next, patent and copyright, skill of management. These things we saw in the earlier lectures. Okay, so now in this session we will see the types of goodwill. So there are 2 types of the goodwill, which are those. First one is a purchased goodwill and the non-purchased goodwill. Okay, so purchased goodwill and the non-purchased goodwill. So now see what in by purchased goodwill. Okay, so purchased goodwill, it means what's when one enterprises, what when one enterprises, or when one business is acquired by another business. Okay, when acquired by the another business enterprises is called what's the purchase goodwill. Okay, so or you can say it means it means what's the difference between the purchase consideration. What it is the difference between the purchase consideration and the value of the net assets is nothing but the purchased goodwill. Okay, so but just try to understand what in by purchased goodwill. Purchased goodwill means what? It is the when enterprises is purchased the business of another enterprises is nothing but what's the purchased goodwill. Okay, so and how to calculate the goodwill under this method? So purchase price minus the net assets. Okay, purchase price minus the net assets. The purchase price means what's whatever the purchase consideration. Okay, purchase consideration, it means what's the agreed to pay. Okay, agreed to P. Okay, so next, net assets. You know how to calculate the net assets. Net assets is equal to the total assets minus the outside liabilities. You will get the net assets. Okay, so this is about the purchased goodwill. And there are so many features are also there in the what purchased goodwill. It means what it is only on the purchase of a business, or you can say it is the difference between the purchase price and the value of the net assets, or it is recognized by the accounting profession. Okay, and it's shown in the balance sheet of the purchasing company. Okay, it's shown on the balance sheet of the purchasing company. Okay, so it's factors like the reputation of the business, or trade name, or sound business connections. Okay, financial advantages. Okay, so etc etc. So this is about the features is also there. Okay, so related the purchase goodwill. Okay, so now see second one, which is the B, non-purchased goodwill. What? Non-purchased goodwill. Okay, so now see what in by non-purchased goodwill. Non-purchased goodwill means what, which is non-purchased goodwill also called as the self-generated or inherent goodwill. Okay, self-generated or the inherent goodwill. So is nothing, it's called as the non-purchased goodwill. Okay, so actually non-purchased goodwill means what? It is arises, what it is arises only when a business is generated its own goodwill. Okay, So it arises when only it's a business its own generated the goodwill over a period of time is nothing but what's the non-purchased goodwill. Okay, so non-purchased goodwill means what? The business his own self, okay, its own self is creating. Okay, so it's nothing but the non-purchased goodwill. Okay, so it's very important for the two marks questions. What do you mean by purchased goodwill, what do you mean by non-purchased goodwill? Okay, so this is very important. Okay, so for the features of the non-purchased goodwill also, in the meaning only there are so many features are there. Okay, it is a self generated. Okay, no costs can be placed on it. Okay, so as well as it's reflected by the purchase consideration, as well as this non purchased goodwill, no, it's not showing in the balance sheet. Keep in mind. Okay, it's not showing in the balance sheet. Okay, so these are the features are there for the non purchased goodwill. It will come for the two marks. Okay, what do you mean by purchased goodwill, what do you mean by non-purchased goodwill? Okay, so these are the types of the goodwill. Keep in mind the purchased goodwill and the non-purchased goodwill. Okay, so in the next slides just see the methods of valuation of goodwill. Okay, so there are only two methods are there for the valuation of the goodwill. Okay, so for the calculation of the goodwill. Okay, so first one is what's the valuation based on net asset approach. Okay, valuation based on net asset approach. So this is what first methods for the valuation of the business. Okay, sorry. So this is the first one, valuation based on net asset approach. Okay, so under this methods, how to calculate the goodwill, purchase price minus the net assets, like this how to calculate. And the second one is a what's valuation method is what's the valuation based on profitability approach. Okay, what's the profitability approach? Okay, so under that again so many things are there, and so many methods are there. First one is a average profit method, and this is second one is a capitalization average profit method, and C1 is a what's the C1 is a what's the super profit method. Okay, so like this three methods are there under the what's the valuation based on the profitability approach. Okay, so now see in this average profit method, simple average profit method is there, as well as the weighted average profit method is there. Okay, so these two methods are there in the average profit method. Okay, so simple average profit means what's the earlier profit. Okay, earlier years profit divided by number of years profit, you will get the simple average profit. Okay, weighted average profit means what's weighted average profit means what? In a business for the in the past years, continuously either increasing or decreasing, under such circumstances the weighted average profit method is used. Okay, so this is about the weighted average one. By in the next, while solving the problem, you will understand this what in by simple average profit, what in by weighted average profit methods. Okay, just try to understand this. Only what main thing, the methods of valuation of goodwill there are two. So which are those two? Valuation based on the net asset approach, valuation based on the profitability approach. Okay, and first one is what's under that only one is there. Next in the second one there are three main methods are there. First one is a average profit method, second one is a capitalization average profit method, and third one is what is the super profit method. Okay, so again in this average profit method, again there are two methods are there, simple average profit method, weighted average profit method. Okay, in the capitalization average profit methods, again there is no any methods, but in the super profit method, there are four methods are there: purchase of super profit method, sliding scale valuation of super profit method, annuity method of super profit method, capitalization of super profit method. Okay, so these are the methods are there. And in next classes we will see all these all these methods with the problem, and while solving the problem you will understand this all these concepts. Okay, so I hope you will be the understand. So thank you.